Welcome back, traders. Markets dropped today, and we've got some interesting technical developments we're seeing, from small caps breaking support to energy looking ready for a move. You're tuned into the Stock Market Summary Series, and as always, before we get our hands dirty in the technicals, just remember that none of this is buying or selling advice. We're just here to provide market commentary and education, but nothing we say here is financial advice. Okay, let's get into it. So today, November 4th, 2025, it really felt like a shift, didn't it? Sellers were definitely in control.
Oh, absolutely. A clear risk-off tone, pretty much from the get-go.
Yeah, the S&P 500 ETF, SPY, finished down 1.19%. The Dow, DIA, held up a little better, down just 0.54%.
But the NASDAQ QQQ, that got hit hard.
It hammered, down 2.03%. And, importantly, it finally filled those, nagging gap windows we mentioned last week.
Yep, price was drawn right to them, like a magnet, just as you said.
Exactly. But the really critical technical piece today, I think, was the small caps.
Definitely. IWM, the Russell 2000 ETF, didn't just break support. It plunged and closed well below that trend line we've all been watching.
That's a big deal. Often the canary in the coal mine, right?
It really is. Signals that broader risk appetite is fading fast, and you have to connect it to the U.S. dollar.
Still climbing.
Relentlessly. And that strength is just a constant headwind for stocks. Makes everything more expensive, harder for multinationals.
Interesting counterpoint, though. Financials XLF actually ticked up 0.52%. They did defend a support trend line.
They did. But let's keep it in perspective. Still showing relative weakness,
Right, still trapped below the 20-day and the 50-day moving averages. So holding support is one thing, but the bigger picture still looks weak.
Precisely. Not exactly a bullish signal there yet.
And speaking of weakness, some specific names we've watched just, fell apart today.
Yeah. Which one stood out to you?
Well, Tesla, TSLA, that momentum watch from yesterday, completely flopped, reversed hard.
Oof. Yeah, saw that.
And also saw Coinbase and Integris, ENTG, both broke down pretty decisively. Snapped those daily support trend lines, those triangle patterns. Gone.
And, days like today really hammer home why process is so important.
How so?
Well, seeing setups like TSLA reverse instantly or coin breakdown like that, it just proves you need to be stacking probabilities in your favor. You need sharp entries, yes, but maybe even more importantly, you need ironclad risk rules.
Knowing when to get out if it doesn't work.
Exactly. Understanding pattern failures, managing risk. That's crucial. It's actually a core part of what we focus on teaching in the Grok Trade Mentorship program, building that robust framework for navigating days like this.
Makes sense. It's not just about finding the winners, but managing the losers, too.
Couldn't have said it better.
As always, guys, if you've got a stock you're watching or a question about the markets, drop it in the comments. We might cover it in an upcoming episode. And by the way, if you're enjoying this video and appreciate these market summaries, do us a big favor and hit that like button. It's totally free and helps us out in a big way. And click subscribe too, so you don't miss a beat. You can always unsubscribe later. Okay, let's shift gears a bit. Energy.xle.
Ah, yes, the coiled spring.
Right. It is coiled incredibly tight. Look at the chart. The 20-day, the 50-day, and the 200-day moving averages are all converging into this tiny point.
That kind of compression.
Yeah.
It almost always precedes a significant expansion, a big move.
Exactly. Question is, which way? But it looks ready to pop. A textbook setup, really. Potential sector rotation, maybe?
Could be. And interesting that this is happening on a day with very light economic news.
Yeah, the docket was pretty empty today, so this was mostly technical action.
I'd say almost purely technical. We had that disappointing ISM manufacturing number yesterday, remember, 48.7.
Right, confirming contraction in manufacturing.
So without big news catalysts today, that underlying technical weakness from small caps breaking, plus the strong dollar, it just amplified the moves.
And speaking of amplified moves, crypto. Ouch.
Yeah, brutal day for Bitcoin.
Down over 6%. It just sliced right through that October 17th low we highlighted on Friday. No hesitation.
Capitulation type selling looked like, just straight down.
And metals weren't spared either.
No, definitely risk off across the board. Gold, GLD, down about 1.75%. Silver, SLV, down 2.33%.
And SLV had an interesting test, didn't it?
It did. Tested its 20-day moving average from below and found resistance there. Classic post-rally consolidation. But in this weak environment, it just resolved lower, echoing the weakness everywhere else.
Okay, so wrapping things up. Today felt like a clear breakdown. Small caps cracking, dollar staying strong. That was the story.
Yep. Technicals drove the bus today.
So the big question heading into tomorrow is, does that coiled spring in energy XLE finally pop and maybe provide some support? Or do we look elsewhere? Maybe JOBY earnings, which are coming up soon, provide some kind of spark.
We'll be watching both closely, see if any rotation develops or if earnings can change the narrative.
All right. Well, that's the summary for today. Wishing you a great rest of the day, everyone.
Trade safe.
And we'll catch you in tomorrow's market summary.